So cryptotherapy, if you have any crypto question that you want to ask Bill and I, obviously not financial advice, but if you're just dying to ask a question, maybe you missed it during the live stream, call us toll free, 1-888-90-TOKEN. That's 1-888-908-6536 to submit your question. We accept calls from the US and international. Be sure to check with your carrier to make sure that there are no fees. Okay, so going to the first question. This one, unfortunately, we don't have the sound for, but we have the actual question. So the question from the community is, this user is, how to avoid losing money in crypto trading? I mean, this is a fundamental question to anybody who's brand new to trading in crypto. So let's have the expert traders. Let's begin with the trader Cobb. What's your take?
Stop losses. Pretty straightforward. If you don't want to, like, the way I describe it is, let's say you sell cars. You're a car salesperson, right? You've got a lot. You've got a place where the cars are there. They are parked in the concrete, on the concrete there. People come in, you show them around the cars. That's your business. The cars are your liquidity. The cars are your product. If you've got no cars, you have a lot. You just have a piece of concrete, which is worth nothing to you. All right. So if you're a car salesperson, you better make sure that you've got cars to sell. If you're a trader, your capital is all you have. All right. So, your capital is your tickets to play the game. So you've got to make sure the first thing that you look after is that capital. Okay. You've got to look after that. Having a plan. So everything I do it's all about being planned. Like I'm the person you get now, like I'm passionate, I'm emotional, I love being spontaneous, having a good time. That doesn't work when I'm trading. Can't do it like that. I lost money hand over fist for a long time because of it. I had to remodel myself so that I could be less like that in the markets. And that's why I've got checklists for everything. So you've got to have a trading plan and you've got to have a risk management plan. That's the first thing. The second thing is, don't trade markets that don't have liquidity to match your portfolio balance. Okay. So if there's a chart that doesn't, like, I'm not going to go and trade large numbers on what did we look at before?
HNT. Yeah.
Because there's not enough liquidity there. Okay. You've got to learn to understand what markets you can trade without getting slippage. So you might want to get it at 500, but you end up getting stopped out at 450 in your long, right? So you increase the risk on your positions by the markets that you trade. So you've got to understand that. Understanding this is the most important thing, because without that, no plans are going to work, because you'll always justify to yourself why you can or can't or should or shouldn't, or you're right or wrong, because it's very easy as a trader, especially when you just buy yourself, to just go, that one goes underneath the carpet. No one needs to know about that one. And we've all been there. We've all done that. So your psychology, and again, what I think to be the best way to do that is have rules around that, which is, if you're not feeling well, don't trade. If you're really tired, don't trade. If you're not feeling positive and in a strong mental state, don't trade. Because if you're in a bad position mentally, whether you trade to make a profit or try to make a loss, the outcome is bad. Okay. You got to focus on being good when you're in the best position to be good, because trading, it's not easy. It should be simple in the way you approach it, but it won't be easy. So if you can plan everything out, manage your risk, manage your headspace, manage the market, and risk comes in many different forms, it's going to give you a much, much, much better place. Ultimately, if you want to be a lawyer, you go and learn law. If you want to be a good trader, go and learn from a good trader. Do your research, find the person that actually, not just because they've got lots of followers, but find someone who knows what they're talking about and that fits what you're doing, and go and invest some money into yourself. That's the ultimate way. It's not an easy path, but it's the path.
Yeah, I mean, great points. Great points there. So I want to ask you one other question. So you mentioned when trading, don't trade liquid coins. Now, do you have any particular measurements you use, right? So for example, like our team, we use what we call liquidity ratio or turnover ratio, where we take the daily trading volume and the total market cap to kind of gauge how liquid a market is. Do you have any metrics like that, or any other metrics you look at in terms of what market is liquid to trade in based on your portfolio?
Yeah. I mean, look, at the end of the day, it comes down to gaps. And that's why you see, like, if I, and here's the best way to do that, in my view, again, by the way, if you look at Bitcoin, you go, okay, well, you look at the 15-minute chart. Notice how it flows through. There's no areas where price sort of suddenly stops and then it opens at $20 below. It flows through quite nicely. And then let's go ahead and look, I've got my watch list here already, so that they're already devised into markets that I can trade more or less. And then if I go down, and I know this is an FTX contract. Where am I? I'm looking for gold. Where have they got that? They've got that as packs, don't they? And then look at that. See that?
Yeah.
See how it's real wiki? See how it's got lots of periods? You got to think back to logic. If this is a 15-minute chart, this candle is showing more or less more higher probability than anything else that there probably wasn't any trades at that price at all during that 15-minute, or very few. Now, if I'm going to go in and risk, say, $5,000 on a trade with leverage, with a stop loss, so my position is going to be quite large, I can't do it there. I won't get the fill. I won't get the trade on that I want to. It'll just skip straight through my order, and I'll be screwed. That's why I won't use a market order, because I can get screwed anyway. So when you're comparing a chart to a chart, always just go, if you go, oh, I'm not sure about the liquidity, even down here at Kyber, that looks okay, but compare it to Bitcoin, our biggest market cap. See how it's blocky, it flows through. The only gap I can really see is between here and here. And I'm not talking about the CME gap or the ICE gap or whatever. I couldn't care less about that gap, to be honest. It's just making sure that there's enough follow through of market that it's not going to hurt me badly. I don't use a volume indicator. I read the chart, and I show people how to do it. It's not complicated, but it does take a bit of practice and getting used to. But if you always come back to Bitcoin, you can see the difference between the two.
Yeah. All right. And then Bill, any thoughts in terms on how people can learn not to lose money trading?
Certainly. So the first lesson I would say is, listen to everything that Trader Cobb just said. Okay. Because all that talk about stops and keeping your head clear is very, very valuable. And it's something you have to learn. So on that note, I would add a couple things. One, make sure that when you win, you take profits. Okay. I know in crypto, everyone's looking for 1, 2, 5x, but fortunes are made by buying low and selling too early. Okay. It is okay to take money off the table so you can experience the idea of winning. Because if you experience winning, then you'll be more motivated to learn some of the things that you need to know to avoid losing. Now, one of the other things that actually comes from William Gann, don't watch the market all day, and in some cases, every day. Now, if you have positions, you have stop losses, you have things that you have to pay attention to, of course, but don't stay up all night looking at crypto. Learn to walk away. Now, you might say, well, walk away and do what? Well, how about something constructive like listening to like a guided breathing exercise, or take 15 minutes to just focus or rest, right? There's the Calm app that's out there, right? Crypto is great. It's really exciting, okay? But, the human nervous system can only take so much, right? 2 or 3 losing trades in a row, walk away, right? Learn how to take care of yourself, and you don't have to look at it 24/7 in order to do well.
All right. Well said, well said. So from my perspective, I think, first of all, everyone here has had great advice. Actually, I'll kind of go the other way around, if that makes sense. Just kind of, I guess, play devil's advocate. I feel like you have to lose money to learn, right? It's almost like the cost of tuition, right? Because every good trader or investor, they've all lost money. Like, nobody has perfect streaks. And I think it's fine to lose money, but as Cobb said, you have to make sure you stay in the game. You have to make sure that one loss or a few losses does not retire you forever, right? So figure out how much capital you have to invest, don't invest more than you're willing to lose. And everyone says that. But back in 2017, I don't think people actually did that, right? Because if you lose money on a trade and you get angry, then I think you put in way too much than you can afford to lose, right? So let's say you have 100 grand to invest in crypto and you put 10 grand into a trade. And at that time you think, I'm willing to lose that. But if you're losing if you're losing sleep over that, that's way too much than that you can afford to lose, because it's different for everybody, right? Somebody can maybe only put in 1 grand and not have to kind of stress about the money they have in crypto or in one trade, because this is different for everybody. Everyone has a different psyche. Some people have nerves of steel. So I would say figure out your mental makeup, right? Because for me, my mental makeup, ironically, is I'm not really a trader. That's why I had more interest towards fundamental analysis and more towards using quantitative analytics software to find an edge in investing. Because with me, yes, TA is good, but I like to sleep well at night. And waking up and seeing the market down and all of that. I think with me, just like my curiosity of being an engineer and being in the tech space made me really gravitate more towards playing the game as a VC, right? So I think kind of figure out your mental makeup, only invest what you're willing to lose, and that's different for everybody. But however, there are pretty standard rules out there. For example, like only put 1% of your portfolio at risk in, per trade. But understand that losing is part of the game. I mean, even the best players, Michael Jordan, or best traders, doesn't matter what skill you're in, you will lose. Just make sure that when you lose, you learn from it, right? Because in my own opinion, I feel like failure is not really failure if you learn from it. Because I mean, I would say actually my worst investments, or let's say trades, have ended up being the best teachers I've ever had, right? So for example, lots of people know that I lost money on Sparkster, right? And if anything, that definitely in a way kind of tarnished my image, because back in 2017, 2018, when the ICO bubble was going up and down, I put in probably over 150 grand in that ICO. It went straight to zero. But the thing is, I was willing to lose that at that time. It may seem ludicrous, but I was willing to lose it. I mean, obviously I would still like to have that money, but not everybody can handle or stomach a big loss like that. So you have to really understand your psychology, right? Whether that means talking to a psychologist or just taking an online test and just kind of figuring out what works best for you. But if anything, losing money on Sparkster or let's say any trade forced me to get better. It forced me to bring people like Bill on. It forced me to bring people like Paresh on. It forced me to build Token Metrics, to now having a team of 20 other experts who are now helping us become better investors and traders. And I think if I was still just doing those quick flips of taking a shitcoin and going 5x, 10x, 20x, 100x, that would not have forced me to go out there and search for better people and just learn, right? So if anything, I feel like you really learn from your biggest failures. It's kind of a lesson. It basically wakes you up, right? So that's kind of my take on that. I'm curious to see what our audience has to say as well. Tell us what you think down in the comments below.